He's the CEO of Schwartz Investment Counsel, portfolio manager to the Ave Maria Mutual Funds, and author of In God We Trust, Morally Responsible Investing. He's here tonight to discuss this volatile economy. Please welcome back to the program, George Schwartz. George, thanks for being here. I want to start with what the Fed Chairman Jerome Powell had to say earlier this week about interest rates. He said the latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated. George, what's causing inflation to keep rising? And despite what seemed like a slight decrease at the end of 2022, what does the Fed plan to do about it? What can they do?
Well, interest rates are going to go up further. There's no doubt about that, Raymond. But what's causing the inflation? Well, it's two prongs. It started back a few years ago when the reckless spending of the Democrat Party, headed by Joe Biden, decided that they were going to spend and spend and spend. Tax and spend, that's always the methodology for the Democrats. But following the pandemic, they pumped, I think it was $1.9 trillion into the economy. That was the watering the seeds of inflation. Then comes along the Fed, which had been keeping interest rates basically at zero for the last several years, and that further watered the seeds of inflation. And that policy by the Fed of having extremely low interest rates, basically zero interest rates, was like the icing on the cake for inflation. And it's high and getting higher now. So the Fed has no choice now
George,
but to raise interest rates.
Yeah, how will this impact home sales, let's say, and investment in businesses?
Higher interest rates always leads to a slowdown, and major purchases like homes and appliances always suffer. And home prices, which had been on a tear for several years, have slowed down recently. And mortgage rates are influenced by higher interest rates, of course, and the economy slows during a period of rising interest rates. That's the whole game plan. Chairman Powell has set his sights on killing inflation, and he's probably going to succeed in doing it at some point, but it's going to take higher interest rates for the time being to do it, to slow down that demand for money.
George, I want to talk about the overall market performance in 2022. Tell us how mutual funds performed last year overall, and how has that year set the tone for what you're seeing now, and how does it look?
Last year was a difficult year for investors in both stocks and bonds. I think for the first time in 40 years, stock prices went down and bond prices went down. Very unusual. But most mutual funds had a terrible year. The S&P 500 was down 18%. The average bond fund was down 11%. At the Ave Maria Mutual Funds, we were very fortunate. The Ave Maria Value Fund was up 4.2% for the year, again versus minus 18% on the S&P 500. In fact, that fund was ranked 11th among all mutual funds in the country. 11th best performance, and among the category it's in, it was ranked #1 in the country. So we were very pleased with that.
Well, George, what's the special sauce? What were they doing differently at that fund than you were doing at your other funds or these other mutual funds out on the market?
Well, as you know, Raymond, I've said for many years that we're contrarians. We try to do the opposite of what most people are doing or what most investors are doing. And last year, a lot of investors bailed out of the oil and gas stocks and coal stocks, the hydrocarbon stocks, and had driven prices down to ridiculously low levels over the last couple of years. And that's when we loaded up on the high-quality oil and gas companies. Again, companies that don't violate the core principles of the Catholic Church, which is what our funds are all about.
Yeah.
And
Let's talk about the Biden administration's handling of this economy, George, for a moment. The president has been pushing private businesses to deliver lower prices to consumers. But how is that possible when production costs and the cost of labor continue to grow? This seems like an anti-market approach here, where the government wants to meddle in the economy. Will that work, just simply shifting prices and say, oh, we're just going to charge less for this?
yeah, the labor market has been very, very strong. It's the unemployment rate is at 3.5% right now, or 3.4%. I think it's the lowest level on record since they've been keeping records, and it's ironic. And there's still 10 million job openings, so employers can't hire people, and it's unlikely that the inflation is going to get broken severely unless the job market loosens up, and the job market is very, very tight. But it's silly that the president is trying to jawbone corporations to lower their prices when everything that he has done and the Democrat administration has done has served to raise cost and raise prices. And it's going to be up to the Federal Reserve now to raise interest rates enough to break the back of inflation, and it'll probably happen.
George, do you think a recession is coming? I know it's been forecasted for a long time. I mean, the prices of just basic commodities, groceries and oil, gas, is through the roof.
Yeah. Inflation had been 9% a few months ago. Now it's running at a rate of about 6%. So President Biden says that inflation is coming down. But you have to remember that just because inflation is at 6% now and is not as high as it was, doesn't mean prices are coming down. It's still going to cost 6% more a year from now. If your groceries cost $100 now, they're going to cost $106 a year from now, everything else being equal, if inflation continues to run at 6%. But it's an ongoing problem, and a recession, yes, a recession could happen. We're not forecasting a serious recession. It'll probably be a soft landing, and this recession has been forecasted for a long time. This coming recession, if it happens, has been forecasted for a long time. I call it the Godot inflation. Everybody's waiting for it, but it hasn't happened. It may not happen either. The economy is unbelievably strong, really.
George, the Biden administration is preparing a new budget. Included in that budget are higher taxes on investments of upper income earners, upper income being $400,000 a year, and a 5% increase in federal salaries. What impact could that have? I mean, Biden says he has to do this to keep Medicare solvent.
Yeah. Well, first of all, the good news is it's not going to happen. The House, controlled by the Republicans now, is not going to allow that to happen. But it's part of Biden's positioning himself and trying to gain votes in the upcoming election, and he thinks he's going to be the nominee. And I hope and pray he's not. But we'll see how that goes. We'll see who the Republicans can put up to go against him.
Yeah, if that tax proposal passed, I can only imagine the impact on investment, though, if they start raising taxes on investments.
Yeah, whenever the Democrats try to stick it to the rich, they end up hitting the middle class harder than ever. And but again, I don't think it's likely that those proposals are going to pass because of the Republican-controlled House.
Let's talk for a moment about investing, an investment strategy. A lot of folks I talk to, frankly, George, are terrified of putting their money in the market right now. Is the market conducive to good returns on investment? And if so, what should their focus be?
There's widespread pessimism among investors today, both institutional investors and retail investors. And I talk to a lot of investors, both at the retail level and the institutional level. And the common refrain is, well, things are a little unclear now, George. I'm just going to sit back and hold cash. Well, I always ask them, where do you think stock prices are going to be when things are more clear? And the answer is stock prices will be a lot higher. There's so much cash on the sidelines. I'm talking trillions of dollars of cash on the sideline by individual investors and institutional investors. And I'm talking about foundations and endowment funds and university endowments and so forth. The next change in investor psychology is going to go from pessimism to neutral or even optimism. And when that happens, there'll be a flood of money going into the market. And with the economy being still relatively strong, even if it gets into a mild recession, there's going to be a lot of opportunity to make very good investments now, which will pan out over the next year or two or three.
George, remarkably, since the last time we had you on the show, the political landscape saw a major shift with the repeal of Roe v. Wade. Ave Maria Mutual Funds have always been pro-life and pro-family. How has this new political reality affected the way stocks are chosen for the Ave Maria portfolios? And how should folks think of morally responsible investing in this current climate?
Yeah, well, we're all about morally responsible investing. We are not SRI, socially responsible investing, and we're not about DEI and all the other things that the left have put forth. But our methodology has not changed a bit in the 20 years we've been running the Ave Maria Mutual Funds. We screen out companies that support abortion and pornography, embryonic stem cell, and a few other items. Abortion's the big one. Our 100,000 shareholders scattered across the country are 100% pro-life, and we manage the portfolios to be consistent with those beliefs.
In God We Trust, Morally Responsible Investing by George Schwartz is available in bookstores everywhere and online. It's a terrific resource, and you can also find out more about Ave Maria Mutual Funds at avemariafunds.com. George Schwartz, thank you for being here.
Thank you, Raymond. Great to be with you as always.